In this video, I want to go over cryptocurrencies from a stage analysis perspective. We're going to go over charts of Bitcoin, Ethereum, Ripple, and Litecoin. Cryptocurrencies have really been pretty much the biggest trade so far in 2017. A lot of these currencies have gained thousands of percent over a short period of time. As usual, the media and the average retail trader in large part has been captivated by these gains really after most of the gains have occurred. Over the last couple months, you've seen a sharp increase in the amount of media coverage in these currencies. But for example, Bitcoin has actually been in a stage 2 uptrend ever since late 2015. And all these cryptocurrencies are dangerously extended from their 30-week moving average and are definitely not at an ideal buy point according to stage analysis. My website is nextbigtrade.com, and I have a stage analysis screener for the stock market at screener.nextbigtrade.com, and my Twitter handle is @nextbigtrade. This website shows the market capitalizations of the major cryptocurrencies, and you can see that Bitcoin, Ethereum, Ripple, and Litecoin are currently the top 4 cryptocurrencies. The market caps of these currencies has grown quite dramatically, and these markets are actually quite large now compared to what they were when these currencies were launched. Bitcoin's market capitalization is now standing at over $40 billion. And there's up to almost 10 cryptocurrencies that have over $1 billion market cap. And what's also interesting is the amount of cryptocurrencies that exist is now in the hundreds, even though some of them have smaller market caps once you get out of the top 300 or so. Taking a look at a chart of Bitcoin. Bitcoin obviously is the grandfather of the cryptocurrencies, and Bitcoin already had a major stage 2 bull market way back in 2013 where it got to over $200 a coin, crashed back down, and then really had a major rally in late 2013 where it rallied from under $200 a coin all the way to almost $1,200. And that was really a bull market that I remember, a lot of coverage by the media back then. But ultimately, this parabolic rise gave way to a stage 3 top and then a stage 4 downtrend. And unfortunately, that's where I kind of dismissed a lot of these currencies, and I didn't really believe personally that they would be able to recover, but it goes to show how your own kind of fundamental view of a market can be completely against what's really happening in the market. And what happened with Bitcoin actually is after it started bottoming in early 2015, it just formed a nice stage 1 base and then broke out again on a massive increase in volume in late 2015 into a new stage 2 bull market. And this is actually quite interesting because a lot of the major coverage on Bitcoin, again, has only been over the last couple months, but you can see how orderly this bull market has been since it broke out in late 2015. We've had a couple pullbacks to the 30-week moving average, but it only actually pierced the 30-week moving average for only 1 week and has held above it really the whole time. And actually, in March of this year was the last major pullback under $1,000 a coin before it went on its really stratospheric rise over the last few months where Bitcoin tripled to the current recent high of just under $3,000. Now, Ethereum is kind of like the second biggest coin right now, and all these other coins didn't really seem to have much going on in them. They had this like just kind of a listless stage one base for a long time until Ethereum started breaking out in late February of this year on massive volume and had a consolidation for a few weeks into the middle of April until it really went on a massive run once again. And this is kind of weird. A lot of the other smaller cryptocurrencies started on a wild ride too, but in late April they started rising, and Ethereum closed recently above $400 a coin. So Ethereum's kind of actually captured even more attention than Bitcoin as of late. But you can see that this coin has basically, like 20 bagged or so from February of this year. Looking at Ripple's actually kind of interesting because it's gone up about 25 times since early April of this year, but I've barely seen any articles on this coin. It's mostly just been Bitcoin and Ethereum, but again, you can see just a stage one base that was going nowhere for a long period of time, and then all of a sudden, the volume really started exploding in March, and you saw a big increase to over 5 cents, and then a pullback for a couple of weeks, and then again in that late April time frame, another massive up leg to where Ripple recently reached a high of over 40 cents a coin. So going back to where the stage one, where it broke out into stage two, it was under a penny a coin, and then it recently topped over 40 cents a coin. So about a 40 bagger in this market, which is way more than what Bitcoin has gained this year. But the top two coins have gained all the attention. And then Litecoin, kind of the same thing as Ripple, where it had an explosive stage two breakout in late March of this year, and really just had a massive uptrend ever since it broke out. Had kind of a pullback in late May, and then another recent rally again, where it got up to about $50 a coin recently. Now, the main reason these coins are so dangerous right now is because they're still hyperextended from their 30-week moving average. What happens in parabolic moves is they typically eventually come crashing back down to this moving average. And when the bull market mania is over, a lot of times they just crash and form a stage four downtrend and then another stage one base again. But in general, the best times to buy are always the pullbacks to these moving averages early in the stage two bull market. And the problem with these coins overall is that Bitcoin has been in a stage two bull market for a year and a half now, and has recently gone into a parabola, and these other coins have just gone into parabolas kind of all at the same time. So all of these markets are super extended from their 30-week moving average and are very dangerous to buy now. So unfortunately, what's happening in these markets is a lot of people are getting greedy and not wanting to miss out. But you've already, if you're trading the markets using stage analysis, your buy point has already gone by. And if you're a disciplined trader, you don't chase markets like this. So again, the best times to buy Bitcoin would have been when it got close to the 30-week moving average again after a consolidation, and before it breaks out again into a new up leg. So we've already seen two or three different consolidations leading into big up legs for Bitcoin, but Bitcoin's are still a little bit shy of 100% above its 30-week moving average, and Ethereum was recently almost 300% above its 30-week moving average, which is quite a large way above the moving average for a coin which such a large market cap. You rarely see stocks with that big of a market capitalization able to be that extended from their moving averages. So again, that's another sign of how much euphoria is in these markets right now. So overall, this has been a monster trade so far for 2017. But if you're a disciplined trader using a system like stage analysis, you know that the buy point has gone by.